Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Oil extends its slide as Iran and Oman push ahead with talks on a temporary shipping corridor through the Strait of Hormuz, easing fears of renewed disruption. European futures point to a higher open. Meanwhile, investors count down to earnings from Nvidia, a key strength test for the AI trade. And the US weighs fresh trade penalties against Canada, raising the risk of an escalating trade war. Well, a very good morning. It is a big day for markets. We're waiting for those Nvidia earnings. Nasdaq futures are on the back foot in anticipation, but it's green in Europe and Asia at the moment. The Kospi is currently helping to power gains in Asia, up 1.8%, gains in particular for the likes of Samsung and SK Hynix. But if we flip to the cross-asset picture, you can see part of the sentiment boost is attributable to oil being down for a third day. Iran and Oman, as I say, pushing talks to reopen the Strait of Hormuz, and Brent weaker more than 2%. 86.65 the barrel is where we trade on Brent. Treasury yields are, though, a touch higher. The 10-year up a basis point at 4.64. And Bitcoin pulling back from that 80k a token level. RM Live team saying that we may have to wait for an inconclusive message out of Jackson Hole for the cryptocurrency to take another leg higher if there's a bout of dollar selling. Now let's take a look at the risk events on the docket, because there are some important ones today. At the top of the hour, we'll get the latest German consumer confidence figures from GfK. But then at 1:30 p.m, it's US PCE data, the Fed's preferred inflation gauge, of course. And tonight, later on London time, the Nvidia earnings will be dropping. Revenue expected to keep growing at breakneck speed, nearly doubling last quarter from a year earlier to $92 billion. That's more than any of its rivals get in a full year. So a couple of big potential catalysts for markets on the docket today. Let's get you started. We begin with Asian stocks climbing this morning as falling oil prices ease inflation fears. Let's get straight to Winnie Su in Hong Kong for an update. Winnie, what are you watching?
Yeah, good morning, Lizzie. Well, we are seeing Asian stocks rising for a second day. As you mentioned, it really is sentiment being supported by oil prices coming down lower as Iran and Oman continue to make progress in terms of reopening the Strait of Hormuz. And you can see also tech stocks leading gains today, as we saw that's tracking the gains in the U.S. peers overnight. We did have Nvidia also snapping 7 days of losses ahead of its earnings later today. Now, interestingly, wanted to point out that in the past 4 quarters where we saw Nvidia earnings actually beating estimate, shares were down about 3 to 7% in the following week. So that's perhaps something also to watch out for. But overall, the tech heavy gauges here gaining a bit of a momentum, up more than 1% across the region. Now, flip the board, we also take a look cross asset, because it really is still the impact from lower oil prices, and that is also easing fears in terms of inflation. Hence, we are seeing yields in Japan and New Zealand falling down, while Australia here is a bit of an exception. The inflation numbers for July came through stronger than expected, and that's raising the expectation for rate hikes later down the road in November, if not December. And that's why we are seeing the 3-year yield here up about 3 basis points, while the Aussie dollar also strengthening to its strongest level in 3 months. Flip the board, another quick look at cross asset when it comes to gold. Interestingly, seeing a bit of a consolidation today after 5 days of gains, but still it's very hard to ignore how strong it has been recently, right? We're talking about the gold prices up about 7% in the past week, and now hovering around its highest level in 3 months. Still, this debasement trade going on after that surprise treasury intervention, and that is also affecting gold-related stocks. We are seeing the gold miners here up against the world index, the highest level since April. But whether this is going to be sustainable or not will a lot depend on what happens on Friday when it comes to the Jackson Hole meeting. Back to you, Lizzie.
Yeah, quite a similar story for Bitcoin at the moment. Winnie, thank you for the update. That's Bloomberg's Winnie Su in Hong Kong. And as she says, part of the reason that sentiment is being boosted this morning in some corners of the market is the fact that oil prices are falling for a third day as Iran and Oman look to push diplomatic efforts to resume shipping through the Strait of Hormuz. For more on the latest in the Middle East, let's bring in Bloomberg Horizon's Middle East and Africa anchor, Badr Abu Omar. So, Abir, what do we know about how this framework for Hormuz could actually work?
Good morning, Lizzie. Well, for starters, we know that it's a breakthrough, a small one between Iran and Oman. Of course, we've reported on this for a month or so, a few weeks at this point, about that deal between the two countries. We've reported earlier, of course, some kind of mechanisms about just how exactly outbound and inbound ships would start making their way through the Strait of Hormuz. But what's important about the framework that was laid out in a joint statement by Oman and Iran yesterday is that, first of all, this is a temporary joint maritime corridor and a project for mine clearance to restore safe navigation through the Strait of Hormuz. The two countries are going into further negotiations to discuss how to find a more permanent solution over the next 30 to 60 days. But then the mining or the demining process, Lizzie, comes in contradiction with what President Trump had said. Now, something to bear in mind is that President Trump had said that the Strait of Hormuz is clear of mines. He did not provide any evidence to that assertion, and it's definitely a claim that he had done before. But Oman and Iran say that the progress or the process of removing the mines from the Strait of Hormuz is going to be part of this framework, and then finding a more permanent solution will happen. And something that is interesting in this framework, again, according to that joint statement, is that they say that maybe alluding to the fact that Gulf countries may take part or will be included in some way, shape or form in those wider discussions that will take place.
OK, because we did have the encouraging news that the US is preparing to return diplomats to Middle East embassies, those who'd been evacuated before and during the war. So, Abir, is there any sign of the US or other countries, indeed, in the Middle East buying into this deal here?
Yeah, that New York Times report, Lizzie, suggests, at least for the time being, they, of course, were citing an internal document suggesting that those staff were coming back to the Middle East or thinking about making their way back into the Middle East, suggesting no military escalation from the U.S. side. At least that is our read into it. But then when it comes to the buying in narrative, it's yet to be seen, Lizzie. Of course, this is very, very recent, and it's just important to note here that these negotiations have not included any third parties. They merely took place between Oman and Iran because they border the Strait of Hormuz, and they are the two countries that are meant to see or oversee the return to traffic to the Strait of Hormuz. Now, of course, the entire world has not agreed to the notion of Iran asserting dominance over the Strait of Hormuz. We reported months ago that European countries and some Gulf countries behind closed doors have kind of succumbed to the fact that Iran will oversee or will manage the Strait of Hormuz. But at least publicly facing, they completely disagree with that notion. That is something that Iran and Oman mentioned in the joint statement. By the way, the management of the Strait of Hormuz, a little bit vague, but we will have to see what that means. And of course, whether Gulf countries and the United States will weigh in on what this means. But for the time being, the positive news is causing, as you have mentioned, a 3-day drop in oil prices below $90 on the barrel for now when it comes to Brent.
86.62 is where we trade right now. Abir, thank you so much. That's Bloomberg's Badr Abu Omar. Well, another potentially massive catalyst on the docket today is going to be Nvidia's earnings out later on today after the bell. The results being closely watched by investors who are looking to gauge the state of the AI industry's massive data center expansion. Let's bring in Bloomberg senior strategist Neil Campling for a preview here. Neil, Nasdaq futures down 0.1% at the moment. How hard is it going to be for Nvidia to impress this market when expectations are just so high?
It's a great setup that you envisaged there, because the stock actually has fallen on results in the last 4 quarters, and it hasn't really had a mic drop moment since 2022. And then actually, but if you step back, we're expecting 99% earnings growth year on year. We're expecting 97% revenue growth year on year. We're 75% gross margins. Whatever metric you look at, there are great expectations. So it's really more, I think, about what we're going to learn on the conference call in terms of the demand, the pricing, the AI complex, and as you say, there's trillions of dollars that are being invested in the whole AI infrastructure build out. And of course, Nvidia is the enabler of all of that technology. So we're expecting big numbers, of course, and the streets could even see a triple digit type revenue growth number. And then data center is going to be the key number within that. That grew 92% last quarter, above the 85% for the top line. But we need to see another strong print, which we will. All the anecdotes suggest it will be. But it's going to be about the conference call more than anything.
What about this story earlier in the week that Nvidia is warning customers that it's going to have to hike prices to account for the surging memory chip costs, about 15% price hikes. When you've got the likes of OpenAI building its own chip, and we're going to talk about that later in the programme, Anthropic building its own chip, Meta signing deals with seemingly everybody, can Nvidia really afford to do this?
It's, as you mentioned, the price rise is 15% for the servers that the chips go into, anecdotally, because of the kind of triple-digit increases in the memory costs. The other providers are looking for alternative solutions that may be cheaper, but will they offer the same performance? Now, OpenAI claim they will have, but will remain to be seen in a business environment whether that's the case. So let's see what happens with that. But clearly, whether it's the Google TPUs or alternatives, they're looking for other solutions. But also, and we talked about this before, the bank of Nvidia with massive investments. Just this month, the $500 billion of credit lines with Wall Street banks and private equity, the $105 billion backstop to one data center alone, the 3 investments in 3 AI startups that Bloomberg News has revealed in exclusive news articles. So there's so much that's tied up into this ecosystem. So let's see what they say about the current environment. But even yesterday, we looked at the prices of GPU rental rates, which shows a surge in usage. So there's no slowdown anywhere in sight at the moment.
OK, tentacles in every pot, this company. OK, there's Nvidia earnings coming out later on today. Neil, thank you for the preview. That's Bloomberg's Neil Campling. We're still ahead on Daybreak Europe. The Trump administration weighs more trade measures against Canada after Prime Minister Mark Carney unveiled dollar-for-dollar retaliation against new US tariffs. We'll get you the details on that. But first, market positioning suggests Scott Bessent's bond intervention may be having an impact. So more on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Coming up to 6:15 a.m. here in London. And Treasury Secretary Scott Bessent's move to increase buybacks of longer-dated bonds has sparked criticism from many in Wall Street. But some market metrics and positioning suggest that it is having an impact. 30-year Treasuries, for example, have outperformed equivalent maturity swaps since the Treasury's announcement, narrowing the spread between the two to its smallest since February. While Citadel Securities has reversed its bearish call on long bonds, now seeing the balance tilted towards a rally. Let's bring in Ben Ram, cross-asset strategist at Bloomberg MLive, who can make sense of all of this for us. Ben, are we seeing signs then that the Bessent put is working?
Morning, Lizzie. Yes, there are definitely signs that it is offering some relief. But the question is, how long is the relief going to last? Because, we had bond vigilantes pushing up yields by a whole lot this quarter, above 30 basis points. That doesn't happen every other day. So given that kind of sell-off that we have seen, it was natural for the shorts to take some profit off the table, especially after Bessent unveiled the buyback announcement. So I think that the mob is dispersed for now, but they will reconvene. They will look for another catalyst, and that will come in the form of deficits, in the form of higher inflation, and they will reconvene again. There is no question about it, but which is why I don't think it is now the time to chase duration yet. Yes, in the short term, the mob is dispersed, but the bond vigilantes will be back.
Then just crossing the terminal, we've had a hot headline that the ECB's Isabel Schnabel has said interest rates must rise further because of the upside risks to inflation. Ben, we know that Schnabel's a hawk on the Governing Council. We know that the market's almost fully pricing a September hike. How likely do you think it is that there'll be another hike beyond that?
Well, the markets are pricing up one more rate hike at least beyond September. So 50 basis points is baked in at this point. But I think the question, despite Schnabel's comments, is that, look, how far is the ECB willing to go in this environment where crude prices have more or less stabilized now? And, the upper end of the ECB's real neutral rate is 50 basis points. So the nominal neutral rate will be about 250. And with another hike, the ECB will get there. So the question is whether the ECB is willing to go beyond the neutral and into restrictive territory. And the ECB's own data shows that, look, there has been no second round inflation effects of this Iran war yet. So I think that the ECB policymakers may decide to wait and watch for the time being beyond September. So I think that if my druthers are right, I think that, we'll get a last hike for this year in September, and then they will prefer to wait out. But they won't commit to raising or keeping the rate on hold at the September meeting.
OK, so Schnabel, something of an anomaly on the hawkish end there. We're also, of course, looking ahead to PCE data out of the United States later on today, then. Fed rate hike bets have been kind of up and down over the past couple of days. We're about 38% price now for September. We've also been hearing from Tom Barkin, the Richmond Fed president, saying that July's hold was a close call. How important is this data today for the path ahead?
Well, I don't think it's going to tell us anything new in the sense that, look, we were doing 2.7, 2.8% on the PCE, core PCE last year. Now we have migrated to this higher range, 3.3, 3.4. It seems to be par for the course, and which is already well discounted by the market. So we know the inflation message from the markets is that, look, inflation has been above the Fed's target for 5 years now. And what is missing is the resolve to quell inflation. And what worries me a bit is that we have had this lean patch of jobs data last month. So I think that, the Fed, if it was already balking at the idea of raising rates last month, with the latest jobs report, I wonder whether they will have the conviction to go ahead and press with a hike.
Well, it'd be good if Kevin Walsh would tell us how he's thinking about these things on Friday. I'm sure we're all hoping for a bit of clarity in his speech at Jackson Hole. But Ben Ram, thank you very much from our MLive team, of course, Ben there. Well, coming up on Daybreak Europe, OpenAI says its chips are outperforming Nvidia's in its testing. So we'll bring you our exclusive interview with the AI giant's chip chief. That's next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, OpenAI says that its new in-house chip outperformed Nvidia's current flagship processor in key tests measuring efficiency and response speed. Chip chief Richard Ho told us exclusively that the goal is to deliver more intelligence to users at lower costs.
The benchmarks that we did were with an open source kind of benchmark called Inference X. And we did that because it was a fair, kind of neutral benchmarking method. What we're seeing with Jalapeno is that we're able to get both high throughput and low latency with the same device, which is a kind of a first in the industry. And why does this matter is because high throughput means that you can serve a lot of customers with a lot of tokens much cheaper than you could if you otherwise. Low latency gives you very fast response times. And so, the agents will come back faster. You can do, more coding quicker. And that really, I think, is a real benefit for our products.
This is it. This is Jalapeno. You very graciously allowed me to get my hands on it. And again, the whole emphasis is on throughput and ultra low latency. This is an inference chip.
It is.
So very simply, why focus on inference, not on the training side with your custom silicon program?
Well, I think that if you look at it, right, OpenAI has this enormous need of compute. And where that growth of compute is really on the inference side. We need a lot of training, and we have a really strong partner in Nvidia who has, really got a great training chip. So we focused on where we thought we needed to increase the amount of compute that OpenAI has available. With the growth in our users, with our weekly active users growing very, very fast, we saw the need to continue to have a wide range of inference products. And this is going to be part of our fleet, along with our existing partners who are providing us other chips.
How do you decide which workload goes to Jalapeno versus Nvidia or Cerebras, for example? You have options, but how do you make that decision?
It's a great question, right? I think with this optionality that we're now creating for the company, I think that we will be able to provide users with a range of models that have different cost benefits and different latency capabilities. We will map that ourselves. We will map out which product, which SKU, which chip is best for which one of these models. But the whole goal of this is to deliver more intelligence to our users at a lower inference cost, at a lower infrastructure cost. And that's what this is part of, that entire strategy that we've been working on for a while now, right?
Lots of people struggle with the benchmarks. To the layperson, it's difficult to decipher. So in very simple terms, on a dollar per token basis, how does Jalapeno stack up against the other options that are out there? How has this changed the economics for you?
It should drop. It's a really good chip. It should drop it by a lot. The performance per watt that we're seeing, which is a good proxy for how much token will cost, is somewhere in the region between 1.8 to 4x better than other existing chips right now. And so we should see that ultimately when this rolls out into production, customer token prices should come down. That's a big drive that we've had at OpenAI for a little while now. And this really is part of that strategy.
That was the OpenAI chip chief, great title, Richard Ho, speaking exclusively to Bloomberg tech anchor Ed Ludlow in San Francisco. Now to some other top stories this morning in the corporate space. Anthropic is reportedly likely to tell investors that its potential revenue opportunities are above $30 trillion, topping the $28.5 trillion estimate delivered by SpaceX at its IPO. That's according to a report from the Wall Street Journal, which says Anthropic has reached its total addressable market figure by looking at the full scope of work that AI models could complete. Elsewhere, Bloomberg understands that SoftBank is in talks with investment banks about a potential $10 to $20 billion bond offering to help refinance a loan for its investment in US tech giant OpenAI. The offering is said to be planned for as early as September and could be denominated in dollars and euros. And SpaceX plans to build a new $100 billion Starship launch site on the southern coast of Louisiana. The company has been authorized to develop a facility across some 125,000 acres at Pecan Island. It would give SpaceX a third potential Starship launch location alongside sites in South Texas and Florida. And here in Europe, in banking, Banco BPM is signalling scepticism over Monte Paschi's takeover offer, saying the bid valuing the bank at €25.3 billion offers shareholders no premium. The bank said its board will assess the offer within the timeframe required by law. Well, coming up on Daybreak Europe, the Trump administration weighs more trade measures against Canada after Prime Minister Mark Carney unveiled dollar-for-dollar retaliation against new US tariffs. So we'll get you the details of that next. We are looking at the Canadian dollar this morning, weaker 0.2%. 138 is where we trade against the greenback. Futures are pointing a touch higher here in Europe this morning on Euro Stoxx 50 futures, up 0.1%. Plenty more next. This is Bloomberg. Live from London, this is Bloomberg Daybreak Europe. I'm Lizzie Burden with your top stories. Oil extends its slide as Iran and Oman push ahead with talks on a temporary shipping corridor through the Strait of Hormuz, easing fears of renewed disruption. European futures point to a higher open. Investors count down to earnings from Nvidia, a key strength test for the AI trade. And the US weighs fresh trade penalties against Canada raising the risk of an escalating trade war. Well, a very good morning. If you are just joining us, 6:30 a.m. here in London is a big day for markets potentially. We're waiting for those Nvidia earnings, and Nasdaq futures are slightly on the back foot as we wait for them. But stocks in Asia powering ahead, up 0.8% on the MSCI Asia Pacific Index. The Kospi up 1.2%, but gains as well for the Hang Seng Tech Index. And we're seeing gains specifically for the likes of Samsung, up 1.2% as things stand. Now flip over to the cross-asset picture, and part of what's boosting sentiment this morning is that Brent is weaker 1.9%. $86 a barrel is where we trade on Brent. This as we see Oman and Iran pushing talks to reopen the Strait of Hormuz, as we were hearing from a bit earlier in the programme. Treasury yields, though, are a touch higher. The 10-year up a basis point at 4.64%. And Bitcoin pulling back from that 80k a token level that we had seen earlier on in the week. But will we get another leg higher after Jackson Hole if you see a bout of dollar selling, if we get an inconclusive message from Fed Chairman Kevin Warsh? Now, let's take a look at the front pages this morning. We'll start with the Financial Times. It leads with warnings from investors that Scott Bessent's bond market intervention is pulling against the Fed's inflation battle as investors look ahead to Kevin Warsh's speech on Friday at Jackson Hole. Then we have the Wall Street Journal focusing on US politics, with President Trump's pick Darline Graham securing victory in a Senate primary race, demonstrating Trump's continued influence over the Republican Party. And then here in the UK, if we flip over to the Guardian newspaper this morning, it's focusing on a government resilience campaign looking to ensure people can cope in a national disaster amid growing risks from extreme weather and hostile states as well. Vicky, get a roundup of all the stories you need to know to get your day going in today's Daybreak newsletter, which terminal subscribers can find by going to D8YB Go. Now, let us turn back to trade. And the Trump administration is discussing additional trade measures against Canada after Prime Minister Mark Carney unveiled dollar-for-dollar retaliation to new tariffs imposed by the US on Saturday. Let's go now for more to Jill Desis, our managing editor in Hong Kong. So, Jill, what could come next? What sort of retaliation for retaliation could we see in the form of tariffs here?
So, morning, Lizzie. I think that at this point, it's still pretty unclear as to what exactly the United States may be weighing at this point. What people familiar have told us, a White House official, is that they're looking at higher tariffs on Canada potentially, or other trade actions. What we just saw from Canada, Mark Carney's announcement, are those dollar-for-dollar tariffs impacting some $20 billion US dollars worth of US goods that flow into Canada. You're looking at, I think, somewhere around 6% of overall exports that the U.S. sends to Canada there. At this point, a lot of these tariffs already cover quite a variety of industries. You're looking at, increased tariffs that Canada is imposing on U.S. steel, on aluminum, on dairy products. So, you're already covering a wide variety of industries. But though this does beg the questions as to whether that is going to cover eventually an even more all-encompassing amount of goods if the United States does follow through with these retaliatory efforts here.
And Jill, we know that Carney wants to ease the impact on Canadian businesses. What have the CEOs been saying so far about the tariffs?
Yeah, Lizzie, at this point, it is, quite a tough position that, all of these companies have really been put into. I do think that what's, worth highlighting here is, the idea that Carney is putting together some type of a domestic support package. That's something that we're expecting to get some more details on. So there is that acknowledgement, at least from the Canadian government, that this is, something that is going to weigh on some of these businesses, particularly when you're looking at tariffs that are touching on steel, on autos. A lot of major businesses that ultimately do business between these two nations. I think the other thing too that's really kind of worth highlighting here is the fact that this is a prolonged trade fight that could go on for quite some time. We've reported this week that Mark Carney and his administration anticipate that this is something that may not be resolved before the U.S. midterm elections in November, and they also may be sort of settling in for something that could last through the duration of Trump's term. So I think that really does kind of underscore a lot of the pressure that these businesses are going to be put under if this is something that isn't resolved with some sort of a resolution that takes these tariffs off the table.
OK, Jill, thank you for the update. That's Bloomberg's Jill Desis. Now, Bloomberg understands that Meta and state attorneys general have discussed a possible mid-trial settlement over accusations that Facebook and Instagram were deliberately designed to addict teenagers. The trial is now in its second week in federal court in Oakland, California. And we can get more now with Balash Pence, Bloomberg's deputy managing editor, also in Hong Kong. Balash, just tell us what we know about this potential settlement.
Well, we don't know a lot, but it is a major development in this case that our colleagues are able to report that the two sides are talking about a potential settlement. We don't know a lot about the details, but there's one thing we can be sure about, Lizzie, that it would be for a lot less than the $1.4 trillion that was flagged as the sort of upper limit of a potential penalty on Meta here. Another area that the two sides might be discussing is the potential changes that might be required to the algorithm, to the software, the very heart of this case, which the states allege that Meta used to get teenagers and young people hooked on its products. And Meta has already said that they expect some of the changes that might be required would be unreasonable. So it stands to reason that that's something that they could also be discussing in these negotiations.
Well, yeah, we've been waiting for the testimony from the Meta founder and chief executive, Mark Zuckerberg, of course. Why could Meta be considering settling now?
Well, one reason is the financial impact. Meta is a huge company, a very rich company, but at some of the upper limits at these penalties, that would be even taxing for them. The other reason is the reputational damage, and Meta has been under a lot of pressure when it comes to its reputation for a while now, going back at least a decade. There has been talk about their involvement in election pressure, election engineering across the world for a long time. But this is something different, something even beyond that. Some people have likened this to the potential reputational damage to what tobacco companies went through when all those lawsuits happened about the addiction to tobacco and how they handle that. If we're looking at something like that, it makes sense that they would want to get in front of it and draw a line under any sort of fallout that may come from a case like this.
OK, Balash, thank you very much. That's Bloomberg's Balash Pence. Well, coming up on the programme, Trump-backed Darline Graham wins a South Carolina Senate runoff to replace her late brother as the GOP candidate. We'll get you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, 6:40 a.m. here in London. Now to US politics, and Senator Darline Graham has won a Republican runoff to replace her late brother Lindsey Graham as the GOP candidate in South Carolina's US Senate race after heavy personal support from President Trump. Her success underscores Trump's grip over the state Republican Party voters and primary voters and the importance that he placed on seeing her win.
I want to thank President Trump for all of his support and his endorsement. Mr. President, Lindsey truly loved you and viewed you as one of his closest friends. I appreciate that bond and appreciate all that you've done for our country. Our victory would not have been possible without you, and we are truly grateful. South Carolina is truly Trump country.
Joining us now for more detail is Bloomberg's John Herskovitz. John, tell us what Trump actually did to help this victory and what the victory for Darline Graham means for the president.
Yeah, no, it's a really strong showing for Trump because Darline Graham just wasn't an obvious winner. She's unknown in the state among voters up until her appointment. The Republican establishment doesn't know her all that well, and she stumbled badly in a debate saying that national security isn't her thing. And she was going up against a well-known congressman, five-term congressman, Ralph Norman, MAGA darling, staunchly conservative. But Trump went all in. He campaigned for her. His MAGA Inc. super PAC put money into the race, and Trump tried to sway the Republican leadership. The result, Darline Graham won by about 4 percentage points. She goes up against the Democrat Annie Andrews, a pediatrician, in the general election. The state leans heavily Republican. Darline Graham is favored for that race. But Trump is now 6-0 for the Republican Senate primaries this cycle. For the House races and the governorships, it's a little bit more of a mixed bag, but he showed his political weight by getting Graham across the line.
Well, yeah, you mentioned the governorships. There was another big test for a Trump-backed candidate in the Republican primary for Oklahoma governor. How did that go?
Yeah, and it was a much closer race. State Senator Mike Mazzei won the race over the Attorney General Drummond by, I think the AP called it with like about a 0.5 percentage point margin between the two. Trump it was really close. Trump put out a video supporting Mazzei, attacking Drummond. One of the key issues in this race was a aluminum smelting plant, $4 billion project planned for the state. Drummond opposed it, Mazzei supported it. There are lots of objections to it from energy use, pollution, and also foreign ownership. UAE is going to have a significant stake in it. So that was one of the key issues. Trump put his money with Mazzei. Mazzei prevailed. Oklahoma's heavily Republican. Mazzei will be favored in the general election in November.
Okay, John, thank you very much for walking us through all that. Bloomberg's John Herskovitz there. Thank you. Now to Europe, and France is heading into a new season of political brinkmanship that's going to really test investors' patience with a showdown over the country's towering debt. Let's get more now with Bloomberg's Caroline Conin, who joins us from Paris. Caroline, just set the scene for us, because it seems like we've got some drama in the pipeline ahead of this budget.
And remember the drama last year, Lizzie, and in fact, over the past 2 years, really, with this French budget, Michel Barnier, who was ousted in a vote of no confidence 2 years ago over the budget, and again last year, François Bayrou. Then you had the current Prime Minister, Le Cornu, who came on board, decided to quit 3 weeks later and was reappointed a few days later. So that's kind of the uncertainty we're looking at over the next few weeks and months. Sébastien Le Cornu is supposed to present a first draft of this budget by the end of the month. As you can see on those graphics, clearly France has not managed over the past few years to really cut these deficits. The deficit is expected to be still at around 5% of GDP this year. And I was speaking with the finance minister, Roland Lescure, in Aix-en-Provence just before the summer. And he was saying that the 2027 target might also be 5%. Clearly not very ambitious. Why? Because Le Cornu has no margin of maneuver. The parliament is still fragmented into 3 blocks. The socialists still have the upper hand if Le Cornu doesn't want to see his government collapse over the next few weeks. So, and the debt servicing costs keep rising, still 65 billion euros just this year, more than 70 billion euros next year. So we could see another showdown over the next few weeks. We could see more votes of no confidence, and we'll see if Le Cornu actually manages to survive until the end of the year.
And of course, Caroline, the bond market's also got its eye on the presidential elections coming up. So what are the key risks here for markets?
So if you look at the bond market, clearly the yields on France 10-year at the moment are above 4%. This is something we haven't seen since the 2008 financial crisis. So France is currently borrowing at higher cost than Spain, Italy, or even Greece. And the spread between France and the German 10-year is actually at around 85 basis points. That's about the level you had last year when Le Cornu decided to quit and was reappointed a few days later. So investors are starting to price in those risks, this uncertainty, this volatility over the next few weeks for the budget, and then over the next few months for the presidential elections. Of course, the biggest risk for the markets for the presidential elections would be to see a runoff, a second run between two extremes, the far-left candidate Jean-Luc Mélenchon and the far-right candidate Marine Le Pen, because there are a lot of other candidates out there, some declaring themselves this week, such as the centre-left Raphaël Glucksmann, Edouard Philippe, former Prime Minister, who's actually got perhaps the best chance at winning in a second round against Marine Le Pen. But none of these candidates are actually really emerging as a really good momentum against Mélenchon or Le Pen. Clearly, this is going to be very interesting. We have the MEDEF conference coming up today and tomorrow night. They're going to organize a roundtable with 7 candidates, including Le Pen, including Mélenchon, debating with CEOs of small and medium companies. And as soon as this weekend, we're going to see the first update of credit rating with Fitch on Friday night. And maybe if Le Cornu doesn't manage to cut the deficit, maybe if we have another showdown over the next few weeks and months, we'll see a new cycle of credit downgrades for France.
Yeah, at the moment, A+ stable is the rating from Fitch. But Caroline, technically, what happens if you have no budget before the presidential election?
So this is actually what happened last year and the year before. France didn't manage to pass a budget by the end of December. Then they had to use what we call special laws in order to roll over the previous budget for the following few months. But in both cases, over the past couple of years, they still ended up with some kind of compromise, some agreement, say by February. The presidential elections are in April and May, April 18 and May 2nd in 2027. So hopefully they have still another 4 months, even if they have to use some special laws for the first few weeks of 2027 in order to try and find a compromise with the socialists. We already know that perhaps this so-called exceptional super tax on big companies that was supposed to be exceptional 2 years ago will probably be reconducted for a third time in order to find some breathing space for this budget. Probably also this exceptional tax on wealthy individuals could be reconducted. Again, the socialists have the upper hand. But this is also very interesting, Lizzie, because there is also this little music growing that if Le Cornu is lucky, if Le Cornu does manage to pass this budget, maybe himself in January or February could be a candidate for the presidential elections.
Caroline, thank you very much. That's Bloomberg's Caroline Gonin out of Paris. Now to some other top stories that we're following for you around the world this morning. Bloomberg has learned that CIA Director John Ratcliffe travelled to Russia for meetings with the topic of discussions unclear. Russian state media reported a US military plane flew into Moscow, while the Kremlin said no meetings with the US administration's officials were planned this week. Elsewhere, Bloomberg understands that Russia is considering extending its ban on diesel exports for another month until October 1st as Ukraine steps up attacks on Russian refineries. We're told the government is discussing the move as strikes this month match July's record pace, adding pressure to already tight global diesel supplies. And here in the UK, Prime Minister Andy Burnham is calling on British firms to offer work experience to teenagers to help tackle what he calls a youth unemployment crisis. This as supermarket Sainsbury's says its plans to provide 10,000 placements in deprived areas. More than 1 million 16 to 24-year-olds are not in education, employment or training, with youth unemployment at its highest since 2014. And finally, the Queen of country music, Dolly Parton, has died in Nashville at the age of 80. She emerged from extreme poverty in rural Tennessee to become a renowned songwriter, singer, performer and businesswoman, known and loved for her one-liners, rhinestone-studded outfits and blonde wigs. Some of her most famous songs include Jolene and I Will Always Love You, which was also covered by Whitney Houston back in 1992. Plenty more coming up. This is Bloomberg.
I told the Prime Minister no deal is better than a bad deal. And we have to go tariff for tariff and dollar for dollar. And it's unfortunate. We had an attack from President Trump on our sovereignty, on our country, on the economy, that we're so integrated. Both countries were both each other's number one customer, and it just doesn't make sense to attack each other.
The Ontario Premier Doug Ford there on Canada's response to new US tariffs. Of course, the autos tariffs particularly hit his province. But is that a surprise, given that Trump has been riled so much by Doug Ford in the past? Well, it seems like the Canadian Prime Minister Mark Carney has listened to Doug Ford's advice there. Canadian counter-tariffs really underscoring the new hard-line approach that Carney is taking to the US trade relationship with Canada, kind of going a bit back to what we saw under Justin Trudeau. But flip the board, because I want to bring you some more terminal charts to frame your thinking for the day ahead. It's going to be a busy one. In particular, after the bell, we've got Nvidia earnings coming out. And just to set us up for that, this is how the stock has been performing in recent days. The stock just snapping a 7-day losing streak, which had been its longest since September 2022. As ever, going into these earnings, the bar really, really high here. Revenue expected to keep on growing at breakneck speed. But flip the board one more time, because thinking about AI more broadly, and you can see, as Barclays strategists have been pointing out, the data center build out really is turning AI from an abstract tech story into something more political, a tangible cost of living issue. So perhaps this is a potential risk ahead of the November midterm elections. As I say, it's going to be a busy day ahead, so let's just remind ourselves of the risk events on the docket for today. Not only do we have the Nvidia earnings, we also have PCE numbers coming out of the US at 1:30 p.m. London time, and just in a few minutes' time at the top of the hour, we'll get the latest GfK consumer confidence numbers for Germany. But that does it for the opening trade. We'll pass you over to for Daybreak Europe, we'll pass you over to the opening trade with Anna and Tom. This is Bloomberg.